With us in the studio, Nihal Abu Ghattas, Ozone and Co-Chair of the Open Finance Group, MFTA, joins us to discuss the different approaches here being taken by the region's two largest economies. Nihal, welcome to Capital Market Wall Street Amina.
Thank you, Rada. Thank you to have me.
First, Nihal, what is open finance and why should someone who just uses their banking apps care about that?
So open finance for you. Open finance is basically giving back control to customers, to consumers. Today, banking is done in silos. Bank A does not know what happens in Bank B. So basically, it's giving back control to customers so they can share their data with other authorized third-party providers so they can get better deals, that being faster loans, better mortgages, better insurance premiums. So basically, it brings back the control to the end consumer.
Okay, it gives control to the consumer. Now, the UAE's open finance implementation, it's already at 85% completed. What has been built so far?
When we say 85%, I believe we're talking more about the FIT program, the Open Finance, the CBUAE's FIT Digital Transformation Program in the financial sector, of which the Open Finance is a major pillar. And when it comes to the Open Finance pillar, what the UAE has done is quite exceptional. They have built one national hub. It is the world's first national centralized infrastructure, where it mandated all 200 financial institutions to connect into that one hub. Instead of asking 200 financial institutions to build the same thing, they provided a national railway, one national hub for open finance, where all of the market participants have to connect to. What makes this very different as well is that the regulation behind it and the licensing framework went hand in hand and at the same pace as the tech, which you don't see in a lot of markets. Today, we've got around 15 TPPs, third-party providers that are under IPAs in principal approvals to build their own solutions. We have around 20 banks that are already live with their APIs, and at a staggering rate. This is done in 18 months. To give you a bit of perspective, the UK has done it in 5 years in order to bring in a substantial number of...
We can see that this region, or UAE, for example, is leading this way when it comes to regulation, when it comes to also the tech that comes with that. Now, Saudi Arabia also just issued its very first open banking license to lean technologies in March. How big of a milestone this is for the kingdom?
It says a lot. It is the moment where Saudi open banking is saying we're now open for business. Basically, we went from testing to now being open for business. It's this first license. It sets a benchmark. It tells other players that we're open for business, basically. And this isn't in vacuum. I believe Lean stated that they've had already connected 1 million accounts and analyzed 1 billion transactions in the sandbox environment. So for them to go into being licensed is a major milestone. And it's an invite to all of the other players to start eyeing sides.
And it says a lot about the work that Saudi is doing lately. It's opening more to businesses in general. Now, the UAE and Saudis are taking very different approaches as well when it comes to open finance. What is the key differences between them?
I would say it comes down to who built the rails. It is... same result, probably, different routes, different ways. The UAE built one national hub to connect all of the market participants for their open finance program. Saudi let the banks and fintechs to build the rails themselves. I would say that UAE optimized for speed, for an aggressive roadmap, while Saudi optimized for a phased approach, a scalable one, and both of them are regulatory led. Having a decentralized approach and a centralized approach leads to the same result, where the end consumer and the businesses would have better financial services And I would say I think the region is very lucky because we get to learn from two different live models at once. So I wouldn't say there's one right answer, but it really very much they both present a great journey that other markets can learn from.
A great model, but also like in this region to be exact. And now the UAE also just launched the first international open finance payment rail. What does that actually unlock for businesses here?
Let me try and simplify this. Today, businesses are doing. I mean, cross border is a big space. We've got expats living in the UAE. We've got businesses that do cross border payments, and what this represents is faster payments at a much lower cost. And so the opportunity that open finance brings here is unlocks use cases like global payroll payments, merchants making payments abroad, all at a lower cost, which is quite significant.
Yeah, definitely. You chair the MFTA Open Finance Working Group. What is the biggest gap that you can see that the industry here still needs to close, maybe?
I would say that I believe that tech isn't a problem anymore. We've proven over and over it's not a problem anymore. The tech is there, the infrastructure is being built. The banks are incentivized to operate and participate in the open finance regimen. I believe that the next level is real customer education on what consent means. That the fact that consenting to share your data with authorized third parties is safe, is secure, you're in control, and it allows you to unlock better financial services. This piece of education needs to be, I would say that's a role that we have to play at the MENA FinTech Association, and to be able to encourage the entire ecosystem to participate and to come up with value use cases that will really matter for businesses, SMEs, and the end consumer.
We know regulation is really big here in the UAE and also in Saudi as well, and it's doing really good for the businesses to open here. And when we hear open finance, when we hear those words, open, freedom, we get really encouraged by them, of course, and it's good for the consumers too. But also there's the safety aspect to all of this, like the privacy and the safety of the consumers. How is that going hand in hand?
In fact, I would say open finance is the safer option. Today, in order for you to get a loan, you print a bunch of PDFs. You go to Bank B to get a loan. You go to you end up sharing your data with unauthorized parties. Within the open finance regimen, you as a consumer, you consent the sharing of data only to authorized third-party players. You're very much in control. You have your own consent app to revoke consent anytime you want. And the only reason you share this data is to get better financial services and to make sure you've got, I would say, a hyper-personalization. Today, I can get better offers if Bank B knows about my cash flow and my transactions. Irrespective of whether I can provide a salary certificate or not. So for gig economy workers, for example, entrepreneurs who don't necessarily have a salary certificate, that opens up a whole lot of opportunities in terms of access to finance. In terms of security, it is by far the most secure way of sharing data, all because it is within the regulatory framework.
Okay, that's really good to understand that for expats and for workers here as well. So where does open finance go next in this region? It's already progressed. Technology is following as well. What comes after the infrastructure is being built?
I would say it's the value use cases that the ecosystem players would bring in. Today you've mentioned cross-border payments being one of the use cases. I read yesterday that there's rent payments now going beyond checks, so you don't have to actually use checks anymore. You can do account-to-account payments. Account-to-account payments is a great use case that merchants all over the world are favoring because of its cost, of its cost advantage, of course. And I would say it's basically around going from viewing data in one place to actually actioning based on that data. So AI advice, financial advice. You've got some money that's left in your account.
Yeah.
Why don't you invest it in savings product X or wealth product Y? The fact that you're able to optimize the use of your finance and your money because you have this visibility, and you move from the viewing of it to actioning it I think this is where we go from here. Plus, I have to say, going from open finance to open data, when you bring in healthcare data, telco data, that makes a huge difference. It's basically allowing the digital footprint of the digital footprint and the digital economies to grow by the sharing of this data.
So growth is coming anyways now in this region. Thank you so much for being here with us, Nihal.
Thank you, Radha. Thank you for having me. Thank you.